All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking the time out of your day to join me this morning. It is Tuesday, July 12th, 2022. My apologies for not doing an aftermarket recap on video yesterday. I had some of my wife's family come over. One of my wife's nephews came over to hang out with my stepson. So I had to go get him and all that stuff. So just the timing, my apologies on there. But again, I did send out the recap of the day on Instagram. So that's there every day. I also included some morning headlines on Instagram. Hopefully you guys enjoy that. That's directly from the Bloomberg professional app. As you know, I always post on Twitter. So again, any kind of updates, news, information, Twitter's your best friend. Instagram would be next as we post here and there. But in terms of Instagram, guys, it's not the best for news because it's not in an order where you can get it immediately unless you turn on notifications. So again, if you kind of use us, let's say you're not a member or anything, that's totally cool. But you're into the markets, you're into the news, and you want to know the news that's important because there's so much out there. Again, turn on notifications so you can always be updated. We're here daily for you guys. Let's go ahead and get started. The Dow is down 173 points this morning. That's mostly because of energy. Energy is down this morning 4.71% on crude oil, gasoline down 4.40. I talked about this on the Investment Club video on Saturday. It was an hour-long video for our members on Discord, and I talked about how inflation and commodities are rolling over. And again, we could be hitting peak soon. In terms of CPI, I was doing some reading yesterday, and me and the team came up with the conclusion, obviously, and I talked about this on the video, that the July CPI tomorrow may still be elevated. Probably more than likely it will be elevated. So the reason that is that all the rollover that we've had in energy or commodities, for example, and yields, bond yields, is happening in July. So we're not going to get that in the July number. We're going to get that in the August number. So my call would be that the CPI number in July will be the peak. This is going to be the highest one we'll have, PPI as well. August will be lower as we roll over. That's just my opinion on what I see. I think the futures are reflecting that. Look at the NASDAQ, green in a sea of red. Commodities are red. Gasoline is red. As you know, gold is red as well. Look at gold. Well, gold is slightly red. Silver down 1.26%. Russell down 0.33%. They have energy exposure. Look at yields below 3% again, 2.924. If you guys remember, we hit 2.8 last week. The dollar came back down after spiking earlier today. We hit parity on euro dollar. Euro dollar hit one exactly. I posted that on Instagram. So again, if you're a if you're a traveler or you decide to maybe have family in Europe, now is the time to go because now you can go ahead and get hotels cheaper based on the currency exchange if you have dollars. If you are in Europe or in the Eurozone, it's going to be tougher on you to get to fly to the U.S. in terms of cost and also any kind of products that are dollar denominated, let's just say. So there's always two sides to the coin. That's why I always say there's no absolute good or absolute bad in the markets. Someone out there is taking advantage of something. Bitcoin, 19,905 is where we are. I had a Bitcoin futures position, a one micro, again, not a ton of exposure other than my Bitcoin holdings. Hit my stop of 20,000. So there you go. I'll see if I can go and reload along if we get above a little higher. Ethereum down 5.8%, 1,072 is where we are this morning. The VIX is up 2%. A lot of that is energy. Let's go ahead and take a look at the crude oil markets. And you could see here now testing 98, 98.71. We know our target. Again, the major target that I'm looking for in terms of crude, so I can start dipping my toe and buying some energy stocks, is 93.10, which is a 200-day moving average. It was 92.53, but it's kind of been moving here and there slightly. So right around 95 to 93 or 92 and a half is where we're looking for in terms of crude oil to start buying into some of these refiners that are paying good dividends, maybe some Oxy or something like that. So that's what I'm waiting for. In terms of gasoline, let's go and take a look at gasoline futures. Gasoline futures are basically in the same boat as crude oil, but again, needs to break below 322 so we can roll over now to that 200-day and get some reprieve at the pump for everyone else. But again, gas prices are lowering. They are running on a lag. That's just the case. Remember, this is refined products. It's not just crude oil that's just pumped from the ground. Gasoline needs to be refined as well and transported, hence why the cost. But again, we are falling as well. So again, starting to see some kind of rollover peak, maybe possible peak inflation. as we move forward. Again, if we still follow the same direction in terms of crude oil, in terms of commodities, the dollar being the main driver of this, I mean, we can go ahead and expand the dollar before like we have in previous videos that we've had. And you could see that break of 105. That was a very big break. That's the highest level we've seen since around 2003. We're right near 2002 levels now on the dollar. The highest point that we've had, the dollar index, was right around 2001, which is 121.02 post.com crash. And right towards, actually, that's right near, this is the year 2001, correct. So again, we do have a possible extension to 114.76. I don't know if we get there. I think the the Fed and these other central banks are going to cut sooner rather than later. So expect that as we move possibly next year. Even Nomura posted they posted a number or a report on Twitter, and I reposted that. It says Nomura expects Fed, ECB, Bank of England rate cuts next year. Based, this is reported from Reuters. So, guys, if you want to do and take a look at that tweet, by all means, go ahead and take a look at that on Twitter. Let's go and answer some questions. Thoughts on shorting oil stocks, Oxy today? Let's go and take a look at it. All right, Oxy is breaking down, but Oxy needs a break of around 57 or so. Maybe wait about 68 more cents to short. Again, this is on the hourly basis. If we go to XOM, maybe we break 83. We could target around 80. So let's see if we could place an alert at 83.07 on oil or XOM. Excuse me, this is ExxonMobil. And I'm just doing the big boys. CVX, I wouldn't do XOM, but CVX, I have 136.16 for a break to the downside if we get that short. Yields down go good for tech stocks today. Yes, yields down and the dollar going down are good things for tech. That's why it's green today. FOMC has kind of been the bottoms of many couple of months, followed by a rally day two, right? Start buying up puts for 2 weeks out. You can, but I'd rather just wait it out. If you just are looking to get a position for the longer term, possibly wait for August if that's the case. I wouldn't go just 2 weeks out because you're going to have the implied volatility of the CPI number. So if you wait for the CPI number, you might get a better price instead. So the CPI and PPI are tomorrow for CPI and Thursday for PPI. So I would wait for those numbers first. Yes, you're going to give up some gains possibly if you're right, but again, the implied volatility just makes it more expensive to make any kind of forward outlooking swing trades on the major indices that are going to be sensitive to either rates or the dollar, which is mostly SPY and Qs in general, because there's so many tech stocks in the S&P 500 SPY index anyways. If you were looking just for a straight shot in terms of value, then you would need to look at the equal weight S&P, which is RSP, which has a little more oil exposure or value company exposure other than the S&P 500 direct. So again, a lot of moving pieces. Pretty much what I'm seeing here is possibly, again, let's not get too excited, but a possibility that we are getting the rollover in inflation, which is what the Fed wanted. So the Fed is actually getting what they want here by raising rates. My contention is that in August, we don't have anything because there's no Fed FOMC meeting. July we do. I think we get 75, and then in August we get nothing. In September we'll probably get 25, if not nothing. I think that's probably the end of it. Do you think it'll be a higher CPI? I do believe we'll have a elevated CPI. I don't know what the expectation is. If we can come a smidge below that, that's a really great sign. If we're slightly above that, then all bets are off. If we meet it, that's a good sign as well. So it really depends on the expectation and how much has moved year over year. So again, let me go and bring up Forex Factory and see exactly the expectation for tomorrow. The forecast is 1.1% month over month. Last month was 1%. Core CPI 0.5%, the forecast this month. If we can get slightly below that, some kind of reprieve, and this is the fact that we haven't even got the new data to reflect that from all the July rollover of crude oil and energy. And energy has a big part of CPI, mind you. So again, if we start seeing that kind of fall, or at least some kind of a momentum to the downside, you should get to 4,000 on S&P this week. Remember, that's the gap fill on SPX 4020. And then we're looking for that rejection of that downward channel that we've had that discussion now for weeks. If we get there, fine, so be it. we could reject and then see what happens with corporate earnings. PepsiCo reported earnings that were strong. American Airlines Q2 preliminary revenue is up 12% versus the second quarter of 2019. That's pre-pandemic numbers. So take a look at the airlines as well. Let's see what AAL is doing. AAL is up a couple of cents this morning. Let's see some pre-market movers together, and mostly probably energy to the downside. Let's see if I can find this here. Let's go to the Dow. And of course, we can see Apple's up 0.36%, Microsoft up 0.40%, Intel up 0.36%. Cisco reports this week. Disney's down slightly, Visa's down 1%, Coca-Cola down 0.4%. If you look at the S&P, AMD's up, American Airlines up 1% as well on that preliminary number. Twitter's up 0.24% after it took a big beating yesterday. Tesla up 0.41%. Nvidia up 0.22. So again, you're seeing some kind of reprieve in the chip space as well, which is important. Lucid also is up today. There was a headline regarding their CEO not stepping down but taking more responsibility. So they're up. More responsibility, I think, taking more of a more job role. I have to read exactly what that was. I skimmed through that headline, but nothing really stands out. Thoughts on real estate in a weird spot? I think real estate's fine. I own real estate, obviously. I also own some real estate in Colombia. Obviously, we had that socialist president become that election. Nothing new there. It's really a family trust, I guess you got. It's my dad's property, but it's going to be mine. I hate to say it's mine, but either way, just the guy to give you guys some perspective. Nothing has changed on that front. In terms of U.S. real estate, I mean, Fundrise I still have. That's real estate investment, and that hasn't really changed in sense. It's been pretty steady. The only thing that kind of changes the narrative in real estate is really rates. So if rates come down, you're still going to see strong demand for housing. If rates increase, the 10-year, which the mortgage rates are based off of, or using that as a barometer, if the 10-year yield rises significantly, it is going to affect housing. But right now, it seems pretty stable. We still have a good number of pending home sales. Yesterday, there was a headline regarding cancellation of contracts. That makes a lot of sense, especially with the cost and the volatility of rates. So again, it's important to lock down a fixed rate, not a adjustable rate. But I haven't heard much of that in terms of adjustable rate mortgages anymore. Good morning. Thoughts on starting position on Meta? I wouldn't start it yet. Let's see their earnings first. Remember, our dollars, according to the dollar index, is more expensive. It's more valuable. So we want to be extremely tactical and careful where we're going to put our money. Again, I still am looking for S&P 3500 to start buying stocks, and Meta is one of them. But looking at it here, we need to get a little lower. That 50% retracement is 34.91. That's been kind of the target I'm looking for. If we hit peak inflation, we may not even get there. But again, the question is the corporate earnings. We need to see. So far, PepsiCo did okay, but that's a staple. Staples have done okay. American Airlines, great number. That's really good to see. If corporate earnings are strong and there's not that much of a hit to the consumer in terms of passing on costs, then we probably hit the bottom. That's the next step. And if that's the case, then yeah, we might have missed the low, but again, we may get a shot to buy some stocks here on the cheap, depending on valuation. So again, we don't know how much Meta is costing us. We don't know how much the value of Meta is yet. We know the price of Meta, but we don't know the value. We don't know their PE ratios. We don't know their positions in terms of their books, in terms of their EPS growth, in terms of their forecasting. So again, what might be cheap today, guys, might be expensive the next day because their multiples might have changed. So again, just be careful. That's all I'm saying. Let's just wait a little bit. I know right now we're getting maybe a little antsy, and trust me, I understand. But let's just be tactical. Let's be careful. Let's be snipers. We only have a number of bullets. Let's make sure we hit our target, and let's not just start spraying machine gun on everything and just take on the market and buy everything available. That's just not going to work at this juncture because there's still too much unknown. The major hang over our head, guys, is earnings. PepsiCo is making me feel better, but again, that's a staple. But the American Airlines one, wow, that was a really good. That's a really good number. Preliminary, that's higher than 2019 pre-pandemic. That's some optimism I definitely like to see. Google run up before the split. I think if Google runs up post split, just like Amazon, same old deal. So I think afterwards it'll bounce. But again, I still like Google. I still own Google. Love them. But I would wait for 3,500. That's the 50% retracement. The only thing that makes me afraid is that we may not get there, and then I really would be upset. So we'll leave it there. Is it over for oil companies in 2022? No, not exactly. I don't think it's over, but again, a spike, that kind of, volatile spike, yeah, more than likely you're not going to get that. Unless you think tanks are going to roll down through Poland or something, then that's different. But having some oil exposure isn't a bad idea, especially with their capital return. Again, they got a lot of cash now with this raising of oil prices, so they're going to return it to shareholders in the forms of dividends and buybacks. So oil's in good position, energy's in good position. It's just overshot due to macro implications of inflation and, of course, the Russia-Ukraine invasion. More than like the Ukraine-Russian invasion. The main thing with energy, and we talked about this months ago, is the reversion of the mean. Again, we can take a look at crude again. Let's go and expand it. And what do I mean by reversion of the mean? Again, you always get spikes. That's normal. But again, look at this run up to 130 and then came back down, and then we tested 120. So again, in a sense, we still kind of have a downward trend. It doesn't mean that energy or oil is dead. I think it'll be dead within 20 years, that we'll all have electric cars in the future, more than likely. But if we go ahead and max it out, again, we've seen this before. You have these spikes of 147, and it drops quickly to 30, gets around to 90, overshoots. So it's a volatile over time. But again, kind of right around the average or the mean, it's around 75 to $90 a barrel. Seems to be that level. Now, before that, we got to around 72 to 50. But I think the money level where, again, stabilization seems to be around 75 to 90. That kind of area is where we would probably approach and stay. And remember, we've had crude oil the negative, guys, and no one was crying for energy companies back then. Now that energy companies are making money, making up for the time they lost and all the money they lost, yeah, it's a different time. Again, energy companies and gas prices are one of the few industries where consumers hate that industry is making money. If Apple makes a lot of money, we don't care. But XOM or Chevron, they make money, we hate them because we're paying more at the pump. That's really it. Like Kathy Wood, best ETF of hers. I do own ARKK. It looks like it is kind of bottoming. There was an interesting report on Bloomberg as well, talking about possible bottoming effect on ARKK. Listen, I'll tell you this: if you're the type of person who is long Bitcoin like me, and you're all about getting a little more risk when no one wants it in the future, ARKK isn't bad. But again, I'm waiting for that level 4,500 to start really putting some money to work. I need to see those corporate earnings before I know what we're going to do next. I know it's a lot, but again, let's be prudent. Let's be smart moving forward. I have bought dips in April thinking that it was over. I bought dips in March thinking it was over, and we had another leg down. So again, we have to learn and be smart and be careful. We'll leave it there, guys. Have a great rest of your afternoon. We'll catch you guys this afternoon, 5 p.m. Eastern Standard Time. Cheers, guys.